Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, July 31st, 2025, we are witnessing an extraordinary event in the market. Meta Platforms, ticker symbol Meta, has just released a blockbuster second quarter earnings report. The news is resounding. Blowout revenue figures and strong indications of Meta's continued aggressive investment in AI, with Mark Zuckerberg declaring superintelligence is in sight. This pivotal announcement has sent Meta stock skyrocketing, with reports showing gains upwards of 10 to 12%. Analysts are swiftly adjusting their price targets, some now seeing potential for Meta to reach as high as $875 to $900. While the daily chart currently displayed shows a close around $695 for July 30th, it's crucial to understand that this price reflects the regular trading hours close, preceding the full impact of the post-market earnings announcement. The real surge began in extended hours on July 30th and is now fully manifesting in today's live trading sessions. This gap between the official daily close and the current market price is a key factor we'll unpack with shorter time frames. Let's zoom right into the heart of the action by examining the 15-minute chart, focusing specifically on the latter half of July 30th. Observe the dramatic shift that occurred after 1900 hours Universal Time Coordinated. Candles, which were previously consolidating around the $690 to $700 mark, suddenly exploded upwards. The candle starting at 1951 Universal Time Coordinated on July 30th marked a significant breakout, with price rapidly escalating from roughly $696 to highs approaching $781 by 2136 Universal Time Coordinated. Notice the immense spike in trading volume during this period. Millions of shares exchanged hands, providing powerful confirmation of this aggressive buying interest. This rapid ascent created a large bullish engulfing pattern across several minutes, absorbing prior selling pressure effortlessly. This immediate post-earnings response showcases a high degree of investor confidence in Meta's performance and future strategy. The swiftness of the move also highlights the volatility, creating rapid shifts in support and resistance levels for intraday traders. Now, let's broaden our view slightly to the 1-hour chart, covering the recent trading days leading up to and including this earnings explosion. Before the earnings news, Meta had been trading within a range, facing overhead resistance primarily around the $715 to $720 levels, visible in the candles from July 28th and 29th. This range also established a short-term support around the $699 to $700 mark. The earnings announcement served as the catalyst for a decisive breakout, shattering these previous resistance points. The sharp upward trend seen on July 30th on this hourly chart completely dwarfs the preceding consolidation. Crucially, the former resistance zone, particularly around $720, now transforms into a robust immediate support level. Any retest of this $720 to $740 region, especially on lower selling volume, would be seen as a healthy consolidation and a potential buying opportunity for those who missed the initial surge. The strength of this move suggests that many short positions may have been squeezed, adding to the upward pressure. Stepping back to the daily chart, let's analyze the price action and key levels over the past several months, starting from early 2024. Meta has been in a clear long-term uptrend, consistently forming higher highs and higher lows. Observe the strong reversal in late April 2024, where price found solid support around $430 after a significant pullback, quickly recovering. This demonstrates the underlying bullish sentiment and strong buying interest on dips. Another crucial area was the $550 to $560 zone, which acted as both resistance and then became support during late 2024. More recently, in March 2025, the stock pulled back from highs near $650 to find strong support again around $590 to $600, followed by a strong rebound. The overall trajectory has been upward, characterized by steady climbs interspersed with relatively shallow corrections. The current surge is a continuation and acceleration of this established long-term bullish trend, reinforcing the conviction of the market participants. This pattern of strong bounces from support levels indicates a resilient demand base for Meta shares. Now, let's consolidate the reasons to be distinctly bullish on Meta, considering both short and long-term perspectives. In the short term, the overwhelming positive Q2 earnings, exceeding expectations on both top and bottom lines, provide immediate fundamental tailwinds. The market's enthusiastic reaction, evidenced by the multi-percentage point jump and massive volume, signifies strong buying conviction that could sustain the rally. Breaking past the previous all-time high of $784.75, which it is approaching, would open up new psychological price levels and further momentum. Looking long-term, Meta's strategic pivot and substantial investments into artificial intelligence are positioning it as a leader in a potentially trillion-dollar industry. Mark Zuckerberg's confident outlook on superintelligence underscores the company's ambitious vision and commitment to innovation. Beyond AI, Meta's foundational advertising business continues to perform robustly, providing the financial backbone for these cutting-edge ventures. The broader tech market's strong performance, with companies like Microsoft also reaching new milestones, suggests a favorable sector-wide environment. This combination of strong fundamentals, aggressive innovation, and supportive market sentiment paints a highly bullish picture for Meta's continued growth. The analyst upgrades following earnings further cement this positive outlook, providing additional validation. While the current outlook is undeniably bullish, it's crucial to identify potential bearish scenarios or points of caution. Short-term, rapid, parabolic moves like the recent surge can often lead to quick profit-taking, resulting in a temporary pullback or consolidation. Traders should watch for any signs of exhaustion, such as a sharp increase in selling volume or the formation of bearish candlestick patterns on shorter timeframes. A failure to maintain the newly established support levels, particularly the $720 to $740 zone, could signal deeper correction. In the longer term, broader macroeconomic concerns, such as an unexpected shift in Federal Reserve policy or higher-than-expected inflation data, like the recent 0.3% PCE print, could temper investor enthusiasm for growth stocks. Increased regulatory scrutiny or unforeseen competitive pressures in the AI or social media landscape could also present headwinds. However, absent a significant fundamental deterioration or a breach of major long-term support levels, which are currently quite distant, any short-term dips are more likely to represent healthy pullbacks rather than the onset of a major bearish trend. For now, the momentum is strongly to the upside, but staying vigilant is key. To summarize our in-depth analysis of Meta's charts and the current market catalysts, the immediate critical support level to watch for Meta is the former resistance zone, now acting as strong support, ranging from $720 to $740. A deeper, but still significant, support rests around the $690 to $700 area, the baseline before the earnings-fueled breakout. On the upside, the primary resistance and immediate target is the new all-time intraday high of $784.75. Should Meta successfully breach and sustain above $785, the psychological price target of $800 becomes the next immediate milestone. Beyond that, watch for the analyst consensus targets ranging from $875 to $900, which indicates significant further upside potential. For traders, look for consolidation patterns such as bullish flags or pennants on the hourly or 15-minute charts. These could offer attractive entry points for continuation trades. Always confirm moves with robust trading volume. Strong volume on upswings validates the trend, while high volume on downticks could signal a reversal. Keep an eye on any further announcements regarding Meta's AI advancements or new product launches, as these could provide fresh catalysts. Also, monitor broader tech sector performance and macroeconomic data, especially any future Federal Reserve commentaries, as they can influence market sentiment. The market is dynamic, and while the current tailwinds for Meta are strong, adaptability and sound risk management remain paramount. Thank you for joining us on Explain the Charts for this deep dive into Meta platforms, and we look forward to seeing you in our next video.